Hello, and welcome to myfinancesteacher.org. In this video, I want to talk about the general stock markets. And we are looking at S&P 500. I think the short-term daily cycle in S&P 500 is already relatively long at 43 days old. And usually these cycles last for about 2.5 months or so. Although sometimes they can, of course, be kind of unusually long, as the one over here between November and February, lasting for just over 3 months over here at 91 days long. So in either case, I think this cycle is pretty long already. The halfway cycle, the midpoint of the cycle is perhaps already behind us, and I think this cycle is ready to give us some sort of a cycle top, perhaps over the next few days, maybe with another poke above the Bollinger Bands before the cycle is ready to come down into the end of the cycle, sometimes close to its usual duration of 2.5 months. We see that back in early April, S&P 500 has already poked a couple of times above the Bollinger Bands, and usually takes a few pokes before the uptrend is reversed into the downtrend. Looking at the 14-day RSI, we also see that the 14-day RSI is already into overbought area at about 74.5 at the moment. Also, if you zoom out quite a lot, all the way back to the middle of last year, and if you connect most of the highs all the way back from summer 2020 and copy that trend line a little bit down, you'll see that actually S&P 500 has mostly been within this channel, upwards channel, where sometimes it did poke a little bit above the channel at cycle tops and poked a little bit below the channel at cycle tops, but mostly the highs and lows were bounded by the boundary of this channel. What we see right now is, again, S&P 500 is poking above this channel, and the last time S&P 500 poked above this channel, it came down relatively hard, all the way down to the lower range of the Bollinger Bands, just after about a week of staying above that channel. So does it mean that S&P 500 has to drop down to, say, 4,000 or below over the next week or so? Not necessarily, but what it means is if you have a position in the general stock market, you probably want to be somewhat cautious and try to manage your risks by using your stop losses to protect your capital, to protect your paper gains, paper profits so far. Let's have a quick look at Nasdaq 100. It's also doing pretty well, although it looks like it's underperforming S&P 500 over the last several months. As you see, S&P is at much higher levels as opposed to the February highs, whereas Nasdaq is just marginally above its February highs. Nevertheless, as I mentioned in my recent video on gold price, we are making really nice gains on QQQ right now. So if you want more details on all of the trades that we make with the members at myfinancesteacher.org, you are more than welcome to join us in our discussion of a range of assets, including cryptocurrencies, general stock markets, energy, precious metals, and a range of other commodities. So coming back to Nasdaq, although it's underperformed the S&P over the last several months, it's still pretty close to overbought with a 14-day RSI at around 66.4. And Nasdaq also has already poked a few times above the Bollinger Bands. Bollinger Bands are widening. And while Nasdaq can continue higher until this RSI dips into overbought area, I think one should probably be relatively cautious on the general stock markets at the moment. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Next, let's move on to the Optimism Index on S&P 500. And we see that generally when this Optimism Index is above the red line, especially if it's close to 80 or even higher, that's when usually these intermediate cycles are close to their tops, as it happened in spring 2019, in late 2019 to early 2020, and in mid-2020. However, more recently, with trillions of dollars being printed in the stimulus packages as well as the infrastructure build-out packages, we see that although optimism stays extremely high at well above 80 all the way through late 2020 into early 2021, The stock markets just keep going higher and higher. The optimism actually had to stay above 80 for several months before we saw at least some sort of a modest correction in S&P 500, perhaps into that modest intermediate cycle low that I've mentioned in some of my recent videos. Since that recent low, S&P has already produced relatively nice gains, and optimism has already bounced all the way from 60 to 78. And in the context of a longer term history over the last many years, the optimism index of 78 right now is already extremely high. But with the understanding of most recent history and with trillions of dollars being printed, perhaps it takes this optimism index to be above 80 for the markets to produce some sort of a top. So over the short term, over the next 1 or 2 weeks, perhaps the markets will continue to be pushed a little bit higher, but a decline into a short-term daily cycle low is likely perhaps over the next couple of weeks. Looking at the put-call ratio, we see that this put-call ratio is at the lowest when everyone is excited about the markets. When nobody wants to sell using the put options, everybody wants to buy using the call options. That usually happens near the tops when everyone is excited, as over here in late spring, early summer 2020. This put-call ratio is poking below 0.4. Another poke below 0.4 in late 2020 summer came just about a week before that corresponding cycle top. And the same thing happened again in October of 2020. As well as in early 2021, we see again a significant poke below 0.4. Nobody wants to sell, everybody wants to buy. That's when the markets are too excited. On the contrary, you want to buy when there is, so to speak, blood on the streets, when everybody wants to sell, when the amount of puts is much higher than the amount of calls. That's when this ratio spikes up, and that is when you want to buy. What do we see at the moment? In early April, we saw another poke below 0.4 on this put-call ratio, and although since then S&P 500 has actually increased a little bit, the last time we saw a poke below 0.4 on the put-call ratio, S&P topped just 1 or 2 weeks after that. So again, perhaps you want to be somewhat cautious on the general stock market. And lastly, looking at our own indicator developed at myfinancefeature.org, this is 25-week return for S&P 500, where the blue line is S&P 500, the red line is the 25-week return. The triangles indicate intermediate cycle lows on S&P 500, and the arrows show the corresponding lows in this 25-week return. What we see here is that, well, over the last couple of years, S&P has been really volatile. Usually, if you look at longer history, it's really a good idea to start accumulating some shares when this red line, this 25-week return, is somewhere below zero. Although in most recent history, with a lot of volatility, a lot of money printing, we see that sometimes intermediate cycle lows take place when this 25-week return is as high as positive 10% back in late 2020. But generally, as I've just mentioned, you want to accumulate, you want to enter into the markets when this 25-week return is somewhere below 0%. We see here in mid-2019, we were relatively close to 0%. We were close to negative 12% back in late 2018. And of course, a significant crash in March 2020 when this 25-week return dropped all the way down close to negative 30%. So what do we see at the moment? The 25-week return at the moment is around 22-23%, which is higher than it's been at the tops all through 2018 and 2019. Although the most recent top corresponds to this 25-week return around 33 rather than 23%. So again, perhaps the markets can still go higher, but we're possibly not at the time when you want to back up the truck and buy a huge load of this stock market if you don't have any positions right now. Then what should you consider doing in this position? Well, join us at myfinancesteacher.org and we can have a chat about that. As you see, I try to update the members nearly every day on a range of assets, including general stock market, precious metals, cryptos, energy, and other commodities. For now, though, I hope you had a nice weekend. I wish you a productive Monday and good luck in your trades.